What's going on? So today we'll be breaking down some charts, the market tightens way with your boy, the Mark. And today I'll be looking at YM and US 30. So starting off, I'm going to look at the weekly time frame for YM. And the reason why I start off on the weekly is because this is one of the time frames that the big boys trade on. And we always preach trade in line with what the big boys are doing. We don't move the markets as retail traders, so why are we going to even try to? Just follow the big boys, follow the blueprint. You know my approach, the Shark and the Remora. The Shark is already out hunting and we are the Remoras just picking up the scraps. So let's get into it. So you can clearly see that last week we closed with this bullish rejection candle and it has a very long wick, right? So you already see that my levels are pre-marked, and this tells you that the sellers might be interested in this level on the lower time frame. If you look on the weekly right here, we don't have any weekly levels because this is the highest price point in recent times. So we can only see candlesticks showing us price action, and we need to drop down to a lower time frame to see what's happening, right? But on the weekly, we can clearly see that we are in a long-term moving uptrend. Cool. Now let's drop down to the daily time frame and see what's happening inside these long wicks and see if we can find an area for us to look for potential resistance. Dropping down to the daily, this is where we can see more structure. So we have that same long-term moving uptrend. However, you can see that for the past couple of days, we formed this area of resistance. Now at this area of resistance, you can see that we have multiple long wicks. Price shorted, came back down to this previous level of resistance, turned into support. So now one key thing to look at this level, you can see that we have multiple long wicks rejecting the level as well, and then price long. Now one interesting thing to see is that at these levels of resistance and support, we have wicks, or sometimes multiple long wicks, which tells us that we have an interaction. In this case, it tells you that the buyers were potentially interested in this level of support right here, hence why we had this long. Now you can clearly see that we are back at this previous level of resistance, which is also a swing high, and we can see price action at the level. Now what type of price action trades can we see? We can clearly see that one, we had the candles shrinking, and then we had multiple long wicks at the level. Then we have this bearish, very long wick candle, or an evening star candle, which tells you that the sellers might be interested in the level. We always have to say might be interested because we have to confirm these things first. We can't just say, yes, the sellers are interested and this is going to happen. We do not know what's going to happen in the markets until we have confirmation. Okay, so now you can clearly see that price came up and we have this double top. For those of you guys who can identify this double top, you can see that we have this left top right here, and then we have the right top, right? So price hit, reverse, price came back up, hit, and reversed. Now you have several types of traders that might just see a rejection of the level and jump in for a short. That's not how we do it. We want to find confirmation because we look at the lower time frames for time frame confluence. That's how we trade, guys. We want to trade in line with what the big boys are doing. Now, if you look at the level, you can clearly see that we have this bearish rejection candle. Then the next candle after that, we have a momentum candle, right? And the reason why I call this a momentum candle is because it's bigger than the previous candles to the left. Now you can still see that we have a wick sticking out at the bottom of this candle right here, but it's in the form of a hanging type candle, telling you that you still have that selling momentum. Cool. Now let's drop down to an even lower time frame and look inside this level right here to see what's further happening. Dropping down to the 4-hour time frame, we can see even more structure. On the 4-hour time frame, you can clearly see that price came back to the same daily level of resistance right here. And what do we see? Multiple long wicks rejecting the level. Multiple wicks telling you that you have multiple attempts for the buyers to break through this level and resulting in multiple failures, right? So since we have multiple failures at this level, then we know that we might have a potential short, but we need to confirm it. Now, from this level of support right here leading up to resistance, we can clearly see that we had this moving uptrend. And for those of you guys who know your structure, an uptrend contains higher highs and higher lows. So as you can clearly see, we have this low point, higher low, higher high, higher low, higher high. And then this is where the confirmation comes in. We have this trend line break right here with this momentum candle. That's how we confirm what's happening on the daily. So we clearly saw that we had that long wick rejecting that daily level of resistance. We can clearly see similar price action on the 4-hour time frame right here. And now we can clearly see that we have a trend line break with a true momentum candle. And as you guys can see right here, the trend line break, then price shorted. Now, another key thing to look at when it comes on to these candlesticks, for those of you guys who know your chart patterns, you can clearly see that this is a head and shoulders pattern, which is a short pattern. Now, how do we identify this head and shoulders pattern right here? You can clearly see that we have this left shoulder, the head, and this right shoulder. Also, a key trait about this head and shoulders pattern is that it has a slanted neckline. So this is a neckline right here, and the neckline is a support level. You can clearly see that we broke through this support level, and now we can see that we have a clear lower low. A clear lower low in a moving uptrend tells you that the uptrend might be unstable. But if you have a clear lower low and then a lower high, you already know that that uptrend is now over, because a lower low and a lower high in a moving uptrend tells you that no, this is a downtrend. Because for those of you guys who know your structure as well, a downtrend contains lower lows and lower highs. In this case, you can clearly see it. So we have bearish confirmation, or a bearish confirmed bias on this 4-hour time frame. Now let's also drop down to the 1-hour time frame, where we can even see more structure, because these are the same levels that we drawn in on the higher time frames. Now we can see more movement because we have more candlesticks at these levels. You can clearly see the same moving uptrend with the higher highs and higher lows. Price came up, broke through the same level of daily resistance with this massive push right here. But all these guys are just fake outs. Now, how do we prevent ourselves from getting caught in these fake outs? We want to have confirmation, and that's why we do top-down analysis, or we do our analysis from the higher time frames coming down to our medium-term time frames, all the way down to our entry time frames, right? We always need time frame confluence, guys. So you can clearly see a more defined head and shoulders pattern, but in the right shoulder as well, you can clearly see that we have this double top, which is another bearish confirmation, still at the same general level of resistance. Now, some of you guys might ask, well, we have a clear higher high right here. Of course, this is a higher high, yes, but we're still in the general area. Remember, in trading, we do not look at everything reacting at a specific point, right? We have to treat the market as something that's always moving, because guess what? We have different buyers and sellers in the market each and every day, and we can't use specific points. We have to treat everything in the market as a generalized area. All right, now you can clearly see that we have intraday levels. Now we have this intraday level of support right here, another one below right here, another one right here, then we have this major level of support. So coming into the markets, we're expecting some type of continuation, or depending on how price reacts to these next levels of support, we can have some type of rejection and a push long. But we have confirmed bearish price action so far, so we want to trade with this new downtrend. All right, guys, so that's how you do your top-down analysis, and it's the same thing for US Treasury. It's the same thing for any asset. It does not matter what you're trading, whether it's forex, futures, crypto, options, commodities, individual stocks, you name it. As long as the asset has a chart, you can look from the higher time frames that you see the same principles being applied. Higher time frames is where the big boys trade on, such as the large banks, large institutions, governments, etc. And then us as retail traders, we trade on the lower time frames and we follow in line with them. It's the same principle that I've been telling you guys about ever since. The Shark and the Remora. The Shark represents the big boys. They go hunting and they kill whatever that they need to kill. And us as retail traders, we just stick onto them like the Remora, and then we pick up those scraps, and those scraps can give us a very wealthy lifestyle when it comes down to trading. All right, guys, so you guys already know what to do. If you like the content, please like, share, and subscribe, and share it with these beginner traders or even intermediate traders, because you know these type of content is what we promote. We don't promote gambling in the market. We promote structure, taking high probability trades, A+ trade setups. All right, so like I said, if you like the content, share it, subscribe, like it, and we'll see you in the next one. Thank you for sticking through this breakdown with your boy, The Mark. And you know we do this the Market Titans way. See you next time. Let's get it.